Welcome everybody to episode 3 of the Treasure Valley Business Podcast. I got Mark Mitchell. He's a reverse mortgage specialist. How you doing?
Good. How you doing?
Doing pretty good. Thanks for being on the show today.
You're welcome. A lot of fun.
So how long you been a reverse mortgage specialist for?
I've been doing reverse mortgage 6 going on 7 years. So before that, I've been in the mortgage business for 20 years. Got into the subprime days when here, fog this mirror and you've got a loan kind of thing. So saw the repercussions of that kind of thing.
Yeah.
But I got introduced real strong into reverse about 7 years ago and just have ever since fallen in love with it.
There you go.
It's been a great program.
Yeah, and you and I, we met through BNI
Right.
over in Caldwell.
Mm-hmm.
Thursdays, 7 a.m., Homes of Idaho, where we meet.
Yep.
7 to 8:30 in the morning.
Mm-hmm.
Everybody's welcome to come check us out. But from our previous conversations, you're from Nampa, correct?
Yes and no. Born in Twin Falls, parents moved to Nampa when I was 3. We moved to Southern California, a little town called Hemet, California, where you were known as a newlywed or nearly dead. It was a retirement town. Those of you that can remember Art Linkletter, yeah, he had a lot of places there. So grew up in Hemet from 1965 until 1977. At that time, my parents moved back here. I graduated Nampa High, 1 year at NNC at the time. Now it's in NU. Met my wife. We got married, had a baby, and then moved back to California in 85 and then back here in 93. And I've been home ever since. So predominantly, yes, Idaho. So.
You've been back and forth, just mainly Idaho to California.
Yeah. Learned a lot in California, a lot.
Do you guys got any family out in California?
Not any, well, distant, yes, but immediate, no. They all moved out. My brother moved from Southern Cal, 8-9 years ago to Highlands, Utah. And then my sister, I think, lives in Ohio now. She's kind of moves a little bit.
That's like one of the few places everybody can mixes up Idaho with Ohio.
Oh, yeah, especially when you go back east. It's like, Ohio? I said, no, Idaho. And they go, you guys have electricity out there? Nope, we still do everything by candlelight. Actually, we go to school with horse and buggy. Because honestly, some of people really think that about Idaho. It's funny.
Idaho's a terrible place. Nobody should move here.
No.
There's nothing good here in Idaho.
Nothing.
So it's just potatoes is all.
Potatoes and
we got.
Sugar beets around here. That's about it.
Exactly. So if you want a boring place to come here.
Yeah, boring.
So.
That's funny you say it because a lady we met the other day, she's been all over the country and actually she's from Europe someplace. And she goes, there's no place like Idaho. You've got something to do all year round. And it is a beautiful, beautiful state. And we say that because we've had an influx of people, a lot. And it's good and bad. It's good and bad. Our traffic is horrible, but it's definitely stimulated our economy and brought some bigger businesses here, which has been nice.
Oh yeah, everything's growing. Like if you know anything about Treasure Valley, Eagle Road is probably the busiest road.
Oh, it's crazy.
Around.
It's
but now 10 Mile Road is starting to turn into super
10 Mile.
Similar.
Yeah, well that and try Caldwell Boulevard.
Caldwell,
the Costco exit.
Oh yeah.
Here in Nampa, it's like holy mackerel.
Well, I don't know how they're going to do it, but I hear they're trying to. Well, there's a levy that they were trying to pass or a bond or something where I don't know how they're going to do it, but the city was talking about somehow expanding that intersection.
They are in the process of, I noticed, expanding the overpass right now.
Oh, really?
On the Caldwell side of it, I've noticed they've dug down. So I'm assuming, I should say, that that's what they're going to be doing. So they've got to do something. So
I know. And then they're going to put In-N-Out Burger right over there too, and if it's anything like the In-N-Out Burger in Meridian,
it's going to be.
It was like a 2-hour wait to just get something
2 to 3
there.
hours,
And that parking lot over there is not nearly as big as
not even close.
Meridian had.
Yeah, I know it's crazy. I won't go there.
No.
Don't want to be that negative Nelly. Foresight would be nice. A little bit of.
Honestly, I don't even get the hype of In-N-Out Burger. I personally do not think In-N-Out Burger is very good. What are your thoughts? Are you a big guy?
He is a outcast. He was raised by wolves. He'll eat raw squirrel and rotten squirrel. So no. In out is, I can remember when I was doing construction down, because that's what I used to do is construction. We would go to In Out for $5. You get a double fries and a Coke, and now it's still reasonable compared to some places, but it's a good burger, great fries. Love their great fries, and they have good milkshakes.
Do you get like what's their animal sauce? Is that what they
No,
call it?
I know there's all kinds of names. I straight old double French fries and a Coke with a strawberry shake.
Other shake's pretty good. I'm
Yeah,
always
they
looking
are.
for a place with good shakes.
Yeah, Freddy's has got, I think, a better shake. Freddy's has a really good milkshake.
My wife and I, we've been. If you get the Sonic app, you can go get half off milkshakes
Oh wow,
at Sonic.
really?
Yeah, they only do it for their small, but for two shakes, you can get. We pay like $4 for two shakes,
Wow.
which. So my wife and I, we've gone a couple times when we got a sweet tooth and everything.
Oh yeah.
Just go and you get for some reason. Well, I think they do it from like 2 to 4, and
Mm-hmm.
then like after 7 o'clock
Mm-hmm.
or something. So that's always been a fun little date that we do.
So, we used to do down at is it the Burger Den down there? The old generations. Anyway, they would have a dollar milkshake. It was just a little guy, but we go down there, especially during the Great Recession.
Yeah.
Yeah, we'd go down there for $1 and get one. That was our fun night with friends and
Well,
each other. That's what we do.
see, now the big hype is frozen yogurt. Everybody is talking about frozen yogurt. You ever
Uh,
go get frozen yogurt?
no.
So there's a frozen yogurt place over near. It's here in Nampa. It's near Albertsons, next off of Greenhurst and 12th, right
Yeah.
over there.
Yeah. Oh, yeah.
Yeah,
Yeah, yogurt's actually been a long time affair here in Nampa. There used to be yogurt affair here in Nampa. There's now a Hispanic restaurant or Mexican restaurant, and right across from Grocery Outlet on 12th Avenue. And for years, Doug and Annie had that, and it was the place to go. Everybody went there. So then they sold out and shut it down.
Mm.
So it was fun times.
and all your kids are around here, right?
Only one has left the nest far enough. Our daughter Marcy, my wife and I have 4 daughters. Whitney is here. She's a RN. She labor and delivery nurse at St. Luke's. Shelby works in the mortgage business, as you know. Marcy left and went to Tullahoma, Tennessee. Cost of living, and she was able to stay home with her kids there, where here she couldn't do it. So, and then Bailey is a farmer's wife in Weiser. So,
There you go.
yeah,
Did I ever tell you my wife's from Weiser?
you're kidding.
Yeah, she grew up in Weiser, graduated from Weiser High School.
How's your wife?
How old?
Mhm.
28.
She might have known the Chandlers. Maybe not Colton.
Someone else was telling me about the Chandlers.
Yeah,
the other
there's
day.
2 Chandlers over there. There's 2 Chandler families. There's a strong LDS, and then this is the Catholic Chandler.
Okay, yeah, I don't know any of them, but I had a client the other day that I told them my wife is from Weezer, and she's like, oh, she probably knows the Chandlers or
Yeah,
something like that. But so that's the second time within like a week that I've heard the name, but I have
yeah.
no idea who they are.
Well, like I say, there's 2 different Chandlers, like the LDS Chandlers and the Catholic Chandlers. So, and I don't know. I know the Catholic Chandlers. That's all I know.
And you guys are pretty big outdoorsy people because I think wasn't it 4th of July? You guys were up in Stanley. You're just telling
Yeah,
me before we started recording that you guys were
Grand Jean.
up near Stanley, Grand
Grand
Jean.
Jean this weekend. We actually got kicked out. We got in there and they came in and said fire's too close, so we had to leave. Beautiful area, lots of natural hot springs, fun place to go. Again, for those that are already here, it's a great place. Those that have never been here, don't go there. No, it really is. It's a fun place to go. It's very relaxing. I think the biggest thing is getting away from internet, phone calls, all that. There's none of that there. It's just a lot of fun. Just very relaxing.
Yeah, that's one of the nice things. I feel like it's just super easy with how advanced technology is
Oh,
to be able to just take your phone with you and say you're not going to work, but you're texting clients, you're sending quick email or
yeah,
whatever, and before you know it, you're working 2-3 hours a day when you're supposed to be
on
just
vacation.
on vacation, hanging
Yeah.
out with family, friends, or whatever.
Yeah, I think that's the biggest thing. But it is nice. I mean, our job's we both can take it and go remotely. Kim and I have done that many times. We have a trailer, we pulled a Cascade and tapped into the internet. Next thing you know, we're working. But that's what we intended to do. It's like a working weekend, just But of evenings, you still got the fireplace or the campfire,
Yeah.
and we love to camp, cook, and that kind, or go out to dinner. Just relax, have a good time.
Oh yeah. Can you work from wherever you are, or are
Mm-hmm.
you only here in Idaho?
No, I am licensed in California, Oregon, Washington, Nevada, and Idaho.
Okay.
So I have my NMLS number, which probably 103620. That is there's mortgage banking and then there's banks. So mortgage bankers, you have to be licensed in the state. And I just recently left a mortgage banker and went to work for a bank. So a bank, I don't have to be licensed. I fall under their charter. So like right now, I'm doing a loan in Tennessee. I've got one in Wyoming. Even though I'm not licensed there, the bank and covers all those areas.
Yeah.
So makes it nice.
That's nice. That's what, because I do health insurance.
Yeah.
And I do a couple of things, but yeah, most of my stuff is all remote. So that's the nice thing is
Yeah.
I can work from wherever I want. So right now I just work out of my house for
Right.
most everything. I was like, if I don't have to pay for an office, I don't want to pay for an office.
Yeah, it's twofold. I'm old school. I'm in my 60s, so it's one of those that I'm not crazy about working at home because I want my home to be where I can shut down.
Yeah.
And during COVID, of course, everybody kind of went home and worked from home. So I had my monitor set up and stuff, and I'd walk out and I'd look over there, and I'm just going to check emails. 6:30 in the morning, and go over. Next thing I know, I'm in my PJs or my sweatpants and my T-shirt, and it's 10 or 11 o'clock. I go in, shower, come back, and I'm working, or I stay in my sweats all day, and it's 7 or 8, 9 o'clock at night, and when you shut it off. So that's kind of a promise I made to my wife that when I'm home, I'm home. I'll shut this stuff off. I've got to. It doesn't always happen that way because you've got your cell phones that they're always dinging our messages.
Yeah.
That you need to return. But for the most part, when I'm home, I want to be home and give the attention now to her. At the time,
Yeah.
when our girls were home, they're all out and married now. So I think that's important. And I think there's a lot of people that forget about that. That family really does come first, not the job.
So what do you do to separate that? Because it's super easy, like you said, to work from home. Are you like physically shutting off like your phone and computer, or is there? How do you separate?
One, I don't bring in my computer. I leave my computer in my car. So if I got a text and it's an emergency, like somebody's going to make an offer on a home, they need an approval letter. Well, yeah, I can go out in 15 minutes, have that done, and send off to them. But most of the time, it will be call me in the morning after a certain time, and that's fine. Kim, on the other hand, I've seen her working until 10, 11 o'clock at night. And then I have to say shut off. But like cell phone, I will go in and plug it in next to the bed. And it's not so much work because we'll have a tendency to sit there, Facebook, Instagram. You're looking at all this stuff, and next thing you know, it's 10, 10, 30, 11, and my brain's not shutting off. There's no downtime. So just want that little bit of downtime before I put my head on that pillow.
Yeah. I got an iPhone. So do you got iPhone or?
I have an Android.
Android. Okay, I assume Android probably has something similar, but with iPhones, at least, you can set a downtime setting where after, like mine set for after 10 o'clock, all of the apps other than like maybe text messaging and phone calls or whatever are blocked. So that way, and I have to like put in a password if I want to, be able to access like Facebook or Instagram.
I did not know that.
Yeah,
there probably is on Android. I'm not
Yeah.
the sharpest techie guy. It's pretty simple to push, call, or it got the contacts down.
Yeah.
Or, hey, Google or whatever, look up, ABC Sports or whatever. But for the most part, it's self-discipline.
Oh yeah.
It really is. If we, no offense, but if you got to rely upon a computer to do all that and you don't have the discipline to do it, then you're going to lack discipline in other areas. So that's my thing. So it is a good help reminder.
Something I just thought of. So you're only a little bit older than me. Have you seen Um, have you seen like self discipline change just as technology's advanced over the
Oh
years
yeah.
and everything?
Oh yeah.
Have there been a lot more people that you notice are getting more distracted and everything, or I don't know? Do you understand what I'm
Oh
asking?
yeah. I think so. I think in some ways it's better, and in some ways it's worse. Um, when you see these professional athletes compared to the 60s and 70s and 80s even, um, their their whole makeup, their whole being is so much more disciplined with all the computers and stuff. I mean, you saw the movie Moneyball with Brad Pitt. Have you seen that?
I have not.
Interesting movie because the guy comes in and goes off stats and where he can hit the
Mhm.
ball the best and stuff, and they build a team and they actually go to the playoffs, I believe. That's based on a true story. So the technology that way has enhanced athletes. I don't know if a 1960 baseball football player could play in the NFL or Major League Baseball today.
Yeah.
You know, they might, but it was sheer talent back in those days. Today, it's talent plus training and strength. On the downside of things, because of that, it also has taken and blown sports up to a point where it can almost become an idolized god. You know, you've got uh, baseball season, you got all summer baseball, you got winter baseball. It's almost like the kids have to pick their sport in the grade school and then concentrate on that sport. Where in our day it was like, you know, football, then basketball, wrestling, baseball, track, those in golf. You would pick your sports, and you played, and that's some great athletes came out that way. But today it's almost specialized. Pick the sport and go with the sport.
Yeah, my wife's a softball pitching coach. I don't
Mm-hmm.
know if I ever told you that.
Mm-mm.
Um, but yeah, so she's been playing softball since she was young, and she just specializes in being a pitching coach
Yeah.
for does private lessons and everything. And yeah, some of these girls, because I think well, lots of their season just ended like a couple weeks ago, just
Mm-hmm.
um, like the summer
Right.
season or whatever,
Right.
and
Travel teams.
yeah, travel teams and whatnot, and but some of those girls are still going year
Mm-hmm.
round,
Mm-hmm.
even though I think spring is when high school softball starts. But then
Mm-hmm.
you got right after high school, you got summer ball,
Yep.
and then you got fall ball,
Yep.
and then you got winter
Yep.
workouts, and then it's back into high
Yep.
school ball,
Yep.
and everything is just nonstop. But yeah, where I grew up in Colorado, but um, and maybe I just even though I was an athletic dude, maybe I just wasn't as into it as other people are. But yeah, I did like soccer in the fall, then
Mm-hmm.
I did wrestling, and
Mm-hmm.
then I did rugby, and
Mm-hmm.
then yeah, so that was my whole rotation. But yeah, some people just spend forever doing
Oh, it's crazy the amount of
that one
money that you
sport.
put into it. It's just,
Oh yeah.
and it's unfortunate because there's not everybody's fortunate to have that kind of income. Not everybody can afford to send if they've got 4 kids and they dump it all into one kid. You don't do that. You got to kind of know your limits and boundaries, and it's unfortunate because not everybody can do that.
Hmm.
And those just supernatural talents that come out of that kind of stuff, it shows.
Yeah.
You know, it's pretty cool. So probably my all-time favorite. Well, it is not probably. It is my all-time favorite is motocross.
Oh really? I didn't
Oh
know that
yeah,
about you.
yeah. Motocross is something I have a huge, always have had. I mean, from Roger DeCoster to Brad Lackey to Marty Smith, Bob Hanna, you know, Damon Bradshaw. I mean, Hanna and Bradshaw both live right here.
Oh,
Yeah, they're Idahoans, have been for years. But
are you talking about like dirt bike, or are you talking about
mhm,
like
dirt bike,
road bike, like the
no
Grand
dirt
Prix
bike,
road
like
bike?
motocross.
Okay.
So yeah, no, those Grand Prix guys are crazy. 180 miles, 200 miles an hour.
Their knees like that
No,
far
yeah,
from
I
the
know.
ground.
That's yeah. I mean, motocross is bad enough jumping and these kind of things, but holy mackerel, that those guys are screamers. But no, it's a fast. But the kids, if they want to get into it, I mean,
Mhm.
I read an article on that one time that it's caused more divorces, more bankruptcies.
Motocross?
Yeah, because the mom and dad have to put a ton of money out, and not just motorcycles and gears, but also travel. A lot of travel because it's not just simply yes, you can do it around in California and that area and be pretty good and do well and probably get recognized, But then there's Loretta Lynn's back in Tennessee every year, and you go to everybody and conversions on Loretta Lynn's,
Mm-hmm.
and they have to race there, and then they get noticed. And factory sponsors is where you want it. But your local will be support you with gear and off on bikes and discounts on parts and that kind of stuff.
Yeah.
But it's still very expensive. In fact, Jake Weimer out of Burley, Idaho, raced, and his dad lost the farm, but Jake was good enough. He got sponsored by Kawasaki, and he bought the farm back for his dad.
Oh, that's a pretty cool
Yeah,
story.
it's a pretty cool story. I guess he's a pretty humble kid.
Huh.
I've never met him personally, but what I hear about him, he's a cool kid.
Are there any tracks around here that you go watch it at, or
OMC is kind of a famous track,
where's
Hawaii
that one at?
Motorcycle Cross. Going to Bogus Basin?
Yeah.
The old J.R. Simplot house that used to be
Yeah.
up there? Take a left right there, and you just went back in there, and you'll come up to OMC. It'll be off on your right.
Is that kind of near Hidden Springs?
You're not back that far, but yeah.
Okay.
Yep. Not back that far. That motocross track's been there for decades, and some famous people have raced there and been there. So it's pretty interesting.
Where else are there very many here in Idaho?
There's one south of Kuna, south of actually the state prison out there. I can't remember.
Okay.
It's changed its name so many times. And then other than that, there's been a couple come and go, but those are motocross tracks. I loved watching motocross, but I prefer to race desert. So
What do you mean, like race desert? Like Salt Lake sand flats or salt
no,
flats?
those are speed. That's speed.
Okay.
That's what's called hare and hound. They're about 100 miles long. You do not cover the same track twice. And you have pits for fuel and energize, and you go as fast as you can for that 100 to 110 miles.
Wow.
And if you come in first, you come in first. And it's anywhere from high speed to rock crawling, slow. Yeah.
So it's almost like just a big trail ride that they're doing,
Kind of like the Baja 1000.
Okay.
Similar to that.
Okay. Yeah, that'd be fun to watch.
That's a problem. It's not a real spectator. You get to watch the start and a couple spots, but that's about it.
You have to you start one spot and then they're already past it.
Yeah.
30 seconds later, and then like, okay, well, what a trip, right?
It is, but it's interesting. It's like, and Idaho's, Brian Brown's the youngest national hare and hound champion ever at 19. Joe Wasson's from here. He's been a national champion. There have been a few riders right now. Oh, shoot. Escapes. He's from Pocatello. He's racing in motocross. He's very Team Honda. He rides for Honda. So, but he's from Pocatello. So Idaho's done pretty well with pro sports.
So like you're saying, nothing good comes out of Idaho. So don't come to Idaho at all, right?
Yeah.
nothing
you won't ride in the winter, I'll tell you that. Right now you're not riding either because it's too hot.
Oh, yeah. Well, I think it was, 107 last week? Something like that.
Yeah.
And I hear it's supposed to get to 107 again.
Yeah.
But then,
this weekend,
especially if you're like in Pocatello or Eastern Idaho, they get dumped with snow and the snow stays forever. Here, it only stays for maybe a week or two.
It can't, yeah.
But over there, just once it snows in October, it stays till March, it seems like.
Yeah. Pocatello can get, and it's windy over there.
Oh,
it's
yeah.
always windy over there.
Oh, yeah.
So, but there's some beautiful places to snow ski over there. And so the southeast Idaho, if you really look at a map, you see all the mountains up north come down,
Yeah.
but that whole like shoe down here from Boise down over looks like desert. But man, if you get in some of those canyons, like the Twin Falls Canyon, Snake River, and Pine Bridge and all that, there's so much of that down there that's just beautiful.
One of my favorite places I rock climb is the City of Rocks, and so that's south of Burley.
Yep.
Town called Alamo, but yeah, if you're driving the highway past Burley, there's really not much over there. So you're like, oh, I'm not going to stop over here. But if you actually get off and you go down to, technically they're part of the Sawtooth Mountains, I think, is technically.
Could be.
I think. Don't quote me on it. But yeah, you get into there. There's tons of like little hidden gems. Yeah. The canyon through Twin Falls, or if you go to Shoshone Falls, they call that like Niagara Falls of the West.
And it is. I mean, I guess they say it's big. I've never been to Niagara Falls, but they say it's larger than Niagara
Oh,
Falls.
really?
Yeah.
I didn't know
And I don't
that.
know if it's the size or the amount of water going over, but yeah, in the
Interesting.
springtime. And the laser show they have on that, I've not seen that yet. I really want to see that.
Oh, I didn't even know they had a
Yeah,
laser
a
show.
laser show in the spring, they do it.
I, I just remember hearing that every. So my mom grew up probably like 30 minutes north
Mm-hmm.
of there in a town called Dietrich,
Yeah.
and I just remember hearing that every year the Twin Falls will just put on like a big celebration for when they open the gates to let all the water out
Yeah.
to go over the falls.
Yeah.
So I haven't been to see it, but that'd be pretty cool to go
It
see.
is. It's Shoshone is really, it's beautiful. And then you got Twin Falls just down the river. I mean, it's
Mm-hmm.
right there. There's other canyons out there that just kind of come out of nowhere
Mm-hmm.
that are beautiful. I mean, here are the Owyhees, and we keep talking about Idaho and how beautiful it is, but we're telling everybody not to come. Sorry about that. The canyons that draw Sinker Creek out there and Lick Creek and all those out in the Owyhees, those canyons are just stunning.
Mm-hmm.
Beautiful. And the wildlife, it's really fun to go look at.
Have you think of just hidden gems? Have you been to Silver City?
Oh, yeah.
I think that's a fun little
It
place,
is a fun
little
little town.
little mining ghost town and everything. Um, yeah, it's a little trek to get out there, but because
Yeah.
you're on dirt road for most of the time once you get off the main road.
And that's where a
Um,
dirt bike comes in handy.
exactly.
Taking those
I
back
have
roads.
dirt biked that road before, which is fun. I'm not a big dirt biker or anything. My wife won't let me get a motorcycle. So Kelsey, if you're watching, Mark thinks I should get a motorcycle.
Yes, I do.
But
I've got a spare one you can ride sometime. We'll go.
oh, perfect, perfect. She's especially doesn't want me to get one because our baby was due on Saturday and the baby hasn't come yet, so we're just waiting for the baby to come.
So we
She could
could
be
be
in
getting a phone
labor.
call
She
right
could be in
now.
labor right now.
Oh, that'd be
my
interesting.
my notifications are silent, so I don't know.
Congratulations.
Thank you. So tell me more about reverse mortgages, because how long you been specializing in that for?
Been going. It's
Six,
going on
7
7
years.
years.
7?
7
Okay.
years now, and there's a lot of people have been in it longer and stuff. And I had the privilege of learning under them, and just phenomenal information about them. They've just changed so much. So probably the biggest misnomer or misconception of a reverse is the bank takes your house.
Mm-hmm.
I get that. Well, and I've literally had friends look at me and say, "Look, you're gonna stay friends. You'll never talk about it again."
Yeah.
Or I can't believe you would even refer that kind of loan to me. And I'm like, if you really understood how they work, you would be asking to do one.
Yeah, I feel like from the people I've talked with, or like if you just go on YouTube and look at videos, there's lots of people get turned off by reverse mortgages.
Yeah, and there's a lot. I mean, your Dave Ramsey, Susie Orman, and a lot of them are like, no, 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 no. And I'm like, time out, time out. You're not, they don't know about them. That's just the problem. They have a program to sell. And if you do their program, you're going to be successful. And I have to say, yeah, that's a lot the truth. If you follow Dave Ramsey's program, you're going to be debt free. You're going to do really well. But will you have enough to retire on? Have you used all this access of cash and things to put into paying off bills or paying that or paying off your home? And then when you're all said and done, you got Social Security to live on. You know, that's the case for some people. Some do well enough, maybe they got a pension or 401k or an IRA and all these kind of things that they've gone into, but that's still down. And we've got our house sitting over here that's paid off. That's actually a liability. You still have property taxes.
Still got maintenance.
You still got maintenance, and you still got homeowners insurance. Now, a paid off home, you don't have to have insurance. But if you don't, you could be like a couple in Colorado Springs a few years back that dropped it because they couldn't afford it, and that fire swept through and it was gone, and they had nothing. They had an empty lot. And that's all they had because they had no insurance to rebuild.
Wow.
So
give us like a 101 of what a reverse mortgage is.
Okay, I will do a 101, but to let you know, it really expands. It really does. But the 101 on a reverse mortgage is primarily you're turning what is a paid off home into it's a liability. It's coming out of all maintenance is coming out what you put into your retirement funds. and or your Social Security, which you put into. That's your money that went into that. And it's, your HVAC goes out. Most people don't have that kind of reserve to set aside to cover an $8,000 to $15,000 bill. Today, roofing, your roof's not going to last forever.
20, 30 grand right there.
Oh, easy. Maybe even higher depending upon your roof size. Maintenance, just paint. You got to paint every so often. Even if you don't want to paint your inside, you do need to paint your outside. You got lawn maintenance. And I mean, my sprinklers are not the best. They're about ready to go. Our house is 18 years old, and I'm looking at this roof going, oh my goodness, there's $30,000, $40,000. Where's that money coming from? HVAC system, it's getting up there. Where's that money going to come from? And you're talking 50 grand probably between the two. My sprinkler system's not great. So bottom line 101 is you have a home that's either paid for or not, but let's say it is paid for in this instance. It can cover those expenses. You do not have to touch your 401k or IRA, and the bank will never take your home, ever. I mean, the one thing, and when we talk of reverse, I'm talking about what's called a HECM. That's an acronym for Home Equity Conversion Mortgage, which is insured by FHA. So in the insurance states that, one, you'll never be asked to leave the house. You will never owe more than the house is worth. You never have to make a payment. Payments are optional. We can talk about it in a little bit. And it's a non-recourse loan. It can't go backwards. So let's say you did a HECM today and the market hits like it did in the Great Recession, or property values plummet. Doesn't matter. That line of credit, as we're talking about on the HECM, never goes away. And they don't shrink it. They don't shut it down. They don't say we can't use anymore like it would on a typical home equity line of credit or HELOC. That one is a recourse. They can come in and say, we're going to shut it down. In fact, I knew people in the Great Recession that had one because I'd done it for them, and they said we don't have anything on it. Well, we're shutting it down. Everybody else, they shut it down and said, you don't have access to it anymore. That is not the case with the HECM. So it keeps going. So 101, on a reverse mortgage, a house pays for itself. It can pay the maintenance. It can pay your property taxes. It can pay your homeowner's insurance, more than likely for the rest of your life.
We were talking about Medicare
expenses. You go into Medicare, it literally can. It can help cover some of that. I mean, if you've got that figured into over here, then maybe. But Dr. Wade Pfau, who has done a book on this, and I love his statement, a HECM can drastically help, or I shouldn't say drastically, but help your retirement funds extend if you use it strategically. You have to use it strategically. If you have a paid off home and you've got access to $100,000 or $150,000 right there and then, are you going to go buy that new truck and camper and trailer? That may not be strategic. You'll never have a payment, and they can't come after your truck and trailer, and you can sell that and not have to put it back on your house. That's the beauty of a HECM, no payment. But if you take that $150,000 and you upgrade your roof, your painting, your HVAC, and those kind of things, stuff. So, or you use that to cover your Medicare, your property insurance or property taxes, homeowners insurance, your HOA dues. That's the house paying for itself and then some. But when we talked about that, I was going to talk to you about that is Medicare. So I'm a couple years away from Medicare, and I want to talk to you about the supplemental insurances that I know I need, because I had talked with a client and our friend, actually his loan officer, that is retired, and she goes, you realize that when you retire, it still costs you about $1,000 a month. So they have enough money in retirement to live. So there's no like income base. They have a pretty good base income. She goes, it costs us about $1,000 a month, her and her husband, to pay for the supplemental insurances that they need. So, I mean, what's an average cost from that kind of thing? That's what she told me, so I don't know.
So with Medicare, there's Part A. Okay. For most Americans, it's going to be $0 a month is what it's going to be.
Okay.
But there's It's an acronym, IRMA.
Mm-hmm.
I don't remember what the acronym stands for, but it's pretty much if you've made this much money, like X amount, then that Part A premium can go up, and it could, I think it cap out roughly around $500. Like if you make a lot of money,
Mm-hmm.
most people are going to be at $0, but it could go up to 500. And then you got your Part B for Medicare.
Mm-hmm.
For 2025, that premium's about $180. And
Okay.
so if you got zero for Part A, 180 for Part B, and then from there you can go into either an Advantage plan or a supplement plan, Medicare supplement, or Medigap is another name for it. Your Advantage plans are going to be 0 to 25, $30 a month on average. Um, and then your supplement plan, on average, like for Plan G, is a super popular plan that lots of
Mm-hmm.
people use. Um, you're looking at about upwards of $200 a month right there. So 200 plus 180.
So you're $600 right in there.
Yeah, for just one person.
One person.
So yeah,
For the two of them,
if
it'd have
it's a
been
couple, then yeah, it's about could easily be
1,000,
600 to
$1,200.
1,000, $1,200. Yeah.
Yeah. Yeah. So, I mean, and how many of us has got that in our retirement plan? I mean, we don't know because everybody, oh, I got Medicare. But the supplementals that cover the gap, as you would call it,
Yeah.
you really got to have.
Oh
You
yeah.
really do. So that could help in that way. I think there's so many strategic options for a HECM that people don't understand. The 101 version is a paid off home saying I want a tenured payment, not a 10-year, but a tenured payment. So I had one client come to me, their house was paid off, and they had Social Security and a small military budget. And it was just about $3,000. Well, throw in the supplemental, there's $1,000.
Mm-hmm.
Then you got your utilities, your property taxes, your homeowner's insurance, and maintenance. They had a nice yard and stuff. That other $2,000 could be gone in a heartbeat.
Mm-hmm.
I mean, it was struggle for them. And they really did want to travel, and they made good money in their lifetime, but they overlived what they thought. Really did. They're in their 80s, close to 90, and so when they did this with the HECM, they took what's called the tenured payment, and they received from their home almost $3,000 a month. That's their tenured income. And that gives them almost a $6,000 a month income. Now they've been to Arizona, they go to Arizona, they come back, they have a lot of fun, they have the freedom to do what they wanted to do. And I think the big thing is they ask their kids first, I said, Mom and Dad, it's your home, go do what you want. That's not always the case, but it was good to know this with this family. And so for the rest of their life. And I think another thing is when that is all said and done and they pass, they will not have outlived the equity of that property. There will still be equity in that property. And here's a huge one, not promoting me or you or anybody, but I'm going to tell you, if you do not have a will and or a trust set up, you're leaving your kids a disaster, a nightmare, because it goes into probate. So a lot of what you say, or so many people, I want to give my kids a house, so many of them it's going to be a nightmare. Some might just give up and walk away because you got probate, which could take months to years. And if somebody from Bung Fung, Egypt comes in and says, well, I'm a long lost cousin and I gave them $100 back then with interest, it's worth $100,000 a day, that's facetious, but those are the kind of problems you got. So with a trust and or will, which go see your attorney, I'm not a professional attorney, go see an attorney, or like Terry Green, she's got Legal Shield. That's another great one to go with. It's cost savings, but you deal with real attorneys.
Yeah.
That'd be a great thing to do. But anyway, with the trust, it sets it all up. So the money that's left over from that, they get to give to their kids, however they divided it up in their trust or will.
We just set up our trust
like
a couple months ago.
It's super
just
important.
Finished transferring over documents.
Yep.
Or accounts and everything just last week. So
yeah,
we're all good.
Yeah.
So with reverse mortgages, your ideal client's what, like 62 years old, right? You got to be a certain age.
For the HECM, the FHA insured product, you have to be 62.
Are there products where like I could get one right now if I wanted to?
No, you got to
Or
be a minimum of 55. That's what's called
okay,
a proprietary
okay,
product. Um, and I'll be honest with you, they're a great product for the person that's really strategically knows what they're doing. So
yeah,
they've got a $10 million estate and prices are down, but they don't want to pull out of this to do,
hmm,
but they want to buy another fourplex. They want to buy
yeah,
another duplex or something. They could go in and do this at 55,
yeah,
pull that money out and go pay cash that's income, then and pay it back as they want. Or on a proprietary, they're a little different on paybacks and stuff. The lines are totally different. With a HECM, and I keep saying line of credit. So I want you to know there is a fixed HECM loan, and it would be at about 7% today. And when you close on a paid off home, we're going to use the structure as paid off. We'll change it in a minute, but paid off home, they will give you blank amount of cash
hmm,
based upon your age, interest rates, and the value of your property. They will give you blank amount of cash, and that's it, done.
hmm,
There's you just here you go. Never make a payment. Don't worry about it. It's whatever. Primarily, what they're saying is on your, and we'll use easy math,
yeah,
$100,000 home,
yeah,
you're 62 and the rate is 7.75%. Out of that 100,000, you would have access to about $40,000. It's low right now. How much you have access to. That equity that's out there makes the payment on if you were to pull that whole $35,000,
yeah,
$40,000
yeah,
based upon you living to be 100 years of age.
yeah,
So that's the life expectancy is 100. So that's 38 years. They're saying, hey, today's rate is 7.75. We're going to take the rest of this as 50, what, $65,000 to make the payment on this as we close today.
yeah,
Now with a line of credit, it is an adjustable rate mortgage or ARM. It is based off the 10-year Treasury note or CMT and the 1-year CMT. The 10-year tells us how large the line of credit is, and the 1-year tells you what your rate's going to be. So there's a margin and an index. The 10-year and 1-year are your index. Your margin is set. It could be 2.5, 2.75, depending, can be as low as 2, depending how it works out. But we'll say it's at 2.5. So you take your 2.5 plus your 1% or your 1-year T-bill, and that's your rate.
yeah,
So it'll adjust. But what people don't realize is that 35,000, if you just covered your closing costs and that's it, and you just left it alone, FHA says, hey, we're going to let that line of credit grow at the same rate we're charging you on everything you've borrowed. So
hmm,
you've only got closing costs in there, 15,000.
yeah,
And don't panic about that. We can talk about that. But the 15,000. So that leaves 30,000, or what, 40,000 be 25,000? Yeah, 25,000.
yeah,
It will grow at 7.75% per year. So you have access to more cash. You can leave it alone. It acts like an investment, but can never go negative. It can never go zero, and it will never go negative. There will always be growth,
hmm,
access to cash. So that kind of gets a lot of people's like, what are you telling me? I'm saying if you leave your line of credit alone, it will give you more money.
yeah. So you can get um, you can get a reverse mortgage and not even touch it.
Yeah,
Then
yeah.
and just keep it as
Leave it alone.
like a little emergency fund if you
Yeah,
need it or something like that,
yeah,
right?
absolutely. Yeah.
How what's the process for getting one of these? Like how long does the process take? Can you do it like in a day or is it like a
No, I
couple
don't know of a
days or
mortgage forward or reverse it and get in a day. Not even the
I'm
little.
not in the mortgage world, so I don't
Yeah, it's
know.
like give me the lien to give me the deed to your house, and I'll give you a loan. That's a different story.
Yeah.
No, normally, so with a you used a loan to get your home.
Hmm.
Okay, so those took about 30 days,
Yeah.
real close. A little different with the reverse because of all the scamming that did happen. The federal government came in and said, if you're going to do a reverse, you have to do counseling, period. In some states, you can't even disclose, you can't do anything but give them a proposal. Say, here's the counselor's names, here's a little bit of information. do this first. They have to do that. And in some states, you have to wait 7 days before you can submit an application. Now, Idaho is a little different. You literally can do an application when you do the proposal, but we don't like to because you lock in that rate. And it ties up the system. You're
Yeah.
putting something in there. So the dedication is having people go out, pay the money, about $135, 45, somewhere's in there. And there's some that are free too.
Mm-hmm.
Do the counseling, then create the application.
What do you mean counseling? Like
They have to get, I can't be any part of the counseling. I
you just
can't
have to
steer
make
them.
sure, like the counselor, just make sure like they're saying they know what they're doing, kind of.
Yep, they understand. So when your mom and dad call me and they say, "Hey, we want to do a reverse," great. So 9 times out of 10, I'll try and get together with them.
Hmm.
If they physically can't meet, I try to do a Zoom. Then we do a screen share,
Yeah.
and I say, "These are the forms the counselor's going to go over," and they're Greek. They literally, you're like, I'm lost. So I explained how they go, and I said, this is what's called the comparison worksheet. Here's your amortization schedule. Here's your TALC or total accrued interest. I
Yeah.
can't remember. And then like fee sheet, what you pay. Everybody sees the fee sheet and they just go, this is too expensive.
Yeah.
I'm like, well, time out. So we'll go back to our $100,000 home. Your upfront mortgage insurance is 2% of appraised value. So on 100,000, it'd be $2,000,
Mm-hmm.
but on a 500,000, it'd be $10,000.
Yeah.
And on $1 million, it'd be $20,000.
Yeah.
And everybody, okay, that's charged up front. This is not a short-term loan. This is not one you want to go, well, I'm going to do this so I can get some money. I want to go buy another house. No, you just wasted that MI. You don't want to do that. If you're in a home that you want to stay, like Kim and I will stay in the home, that MI is worth it because that goes for as long as we're in that home. So let's say we do live to be 100. Well, take that $6,000 or $10,000, we'll say.
Yeah.
No, probably more like $12,000 or $15,000, and divide that over 30 years per month. That's pretty cheap insurance to guarantee me I never have to make a payment. I'll never be asked to move out.
Yeah.
It's a non-recourse loan. They can't change their mind on anything. It's done. And I'll never owe more than the house is worth, ever. If the loan's bigger or my line of credit's bigger than the house is worth, you realize I can take that whole line of credit and leave, and it doesn't even affect my credit. So this is why I say I kind of can spit this stuff out too fast, and it can get that deer in the headlight look.
Yeah.
But when you can sit down and talk with them over that,
yeah.
then I give them the counselor. I can't point them to a counselor. They have to choose their counselor. Idaho Housing does it. There's some others around the country. There's Horizon, there's Continental, there's a few others out there. And they can go to, but they have the list of counselors. They make the phone calls. I can't make it for them. So they do the counseling. Once I have the counseling cert signed by both them and the counselor and a paid invoice that it's been paid, if there's a charge or free, that it's free, then we're off to the races with the application. From there, you're normally 30, 45 days.
Okay.
On purchases, we can cut that down because we know there's a contract date.
Yeah.
But that's where if they're looking, I try to get to them early and say, get me your documentation now. Because I don't care, again, if it's a forward or a reverse mortgage. If you do not get your loan officer the documentation, you're the one postponing the closing, not them.
Yeah.
Whether you like it or not. You don't need my property tax information. Mm-hmm. Yes, I do. You don't need my homeowner's insurance history. Yes, I do. Or my HOA. Yes, I do. So there's a lot of background check. So just get that stuff. It's simple. It does seem a little intrusive, but trust me, it's worth it.
Yeah. So I know you're not the only one that does reverse mortgages. Why should someone come work with you?
I love people. Remember I said I grew up in Hemet, California, where you were newlywed or nearly dead. That's kind of what they said about Hemet. And so my dad had a carpet store, and I was a swamper. So I'd be picking up scraps and helping load stuff and picking up tools. And once in a blue moon, I'd get on a stretcher, but not very often as a kid. But I got the time to sit around and talk and listen to the history. I love the history. I mean, I've done home and flying the original Flying Tigers from World War II.
Mm-hmm.
I got to work with them. One
Oh,
of those
cool.
guys. Yeah, it was phenomenal. Just got to deal with some really great people, and so I've always had that. Um, the elder abuse until I got into the reverse world, I didn't realize how bad it was. My dad, who passed away at 88, prior to that had a reverse, and he got hammered with you don't have mortgage insurance, and it would look like it came from me.
Yeah.
But in the fine print at the very bottom, this is not from the original lender. And so, and my dad was sending cash to Istanbul and Canada and blah, blah, blah to win their lotteries.
Mm-hmm.
And it's so prevalent that I get a lot of phone calls about that stuff. And once a client with me, you're always a client. And it's not a client, you're my friend. And I literally do. We pick up the phone call and we'll talk and how you doing, blah, blah, blah. Mark, I got this, or, I'll find out about this or that and just talk them through. I had a few year before last that lost spouses. I had 3 that lost their spouse. And their first phone call, how does this affect? It doesn't. It doesn't affect it at all. You're fine. It's still in order, but it carried them through. Mm-hmm. They're using that strategically. They realize they've got this money over here. And here's what a lot of people don't realize. They walk in with their spouse with Social Security incomes, but they forget that if one of the spouses die, whoever makes the most, that's all you get. You lose the other one.
Yeah.
So if one's making $2,500 and one's making $1,000, they're using that $1,000 to pay on the car or whatever. You just lost that. That's where HECM can really help as well, if the reserves are there.
Okay.
So, but work with me. Probably the largest compliment I ever had was from a lender or a borrower in Soda Springs, and she was shopping, and she called up and said, "This guy's willing to do this rate and go." I said, "Okay, I can do that rate." It was below what we normally go, but I can do this. And they go, "Well, I told him you were willing to do it. We want to work with you, and he's willing to do the waive the whole origination fee." And I said, "I can't. I've got overhead. I've got rent. I've got employees. I've got processors. I've got underwriters because we're a correspondent lender, which meant we underwrote our own loans." Mm-hmm. I said, "I'd love to help you. I'm here all the way through if you need me. If you've got questions about something he's doing, you just call me." And that's what I tell him. You call me, I'll talk with you. It's not like, you use me, you're gone. No.
Yeah.
And they called me back and said, "We've decided to go with you even though you're more expensive because you've answered our questions. You've taught us how it works." I said, "Well, I'm here to the end and beyond." And that's the way I do it. So I just won't, it's not a once and done.
Yeah.
So
I love it. Who's your ideal client? Who are you wanting to work with right now? Obviously, probably 62 and older.
62 and older. I think the biggest thing is financial planners, CPAs, and a lot of people that are on, I mentioned them earlier, Dave Ramsey and Susie Orman, they just don't get the concept of it. You've got to take that house out. And I say this to everybody, including you, Tanner, take your house out of what I call a holy grail status, can't touch it because I'm going to give it to my kids, put it into your portfolio, and I'm like 98% sure you will give your children more than if you kept the house over here by itself. Mm-hmm. Because that could allow you to maybe leave more money in the retirement account. It could be, if your house is paid for, you can pull this out and take them on a vacation that you could have not done it with your retirement accounts. But if you put them all together and you go, okay, we've got access to this much cash now, we can take that vacation with our kids.
Yeah.
We can go to Hawaii or wherever you want to go, or Europe or whatever, and do it and not worry about a big credit card payment when you're done. Mm-hmm. If that's the strategy you want to use. If it's strictly investment, you could use that to maybe put a down payment on a fourplex or a duplex and keep that, it down payment, it cash flows, you put it that way. Or you just go, I want a fourplex. I'm good with, because I travel so much. It's primary residence. You literally could take sell your home, buy a fourplex, live in one unit,
Mm-hmm.
the other 3 rents, you don't have a mortgage payment on.
Yeah.
That's income. So that's a reverse. That's a heck of, you can do that up to a fourplex.
Hmm.
So my wife and I, if we could build a really nice custom duplex type thing, or 2 single family more or less on one legal lot,
Yeah.
buy it a reverse, we would never have a mortgage payment. We could rent this out, pay somebody to be the landlord. I don't want to be a landlord. I don't even want them to know I own the property. But just, we get to keep the rent. There's no payment, none at all. And that property is going to appreciate.
Yeah.
And go up and go up, go up. So there's so many different ways to strategize when you take your house out of the Holy Grail and you bring it into your portfolio. What do I want to do?
Yeah.
So, and there's even ways to get tax-free money from your IRA or 401k with a HECM. That would be if you had a loan balance and acquisition cost. And we can talk about that another time. That's where it can get a little confusing, but it's very doable. Got to remember, when I say payments are optional, for every dollar you write down on that payment, on that loan, you have access to that dollar within about 30 days. But if you just leave it there, whatever rate it's at, it's growing at. And today it's growing at like 7.75. So there's not a savings account around that's paying 7.75 that I know
Nope.
of. That I can get, once it's in there, it's 2-day money back into your account.
Yeah.
So, and it's tax-free money. There's no tax on it because you're borrowing money. You do not pay income tax on that money.
Yeah.
You're borrowing it. So my client, anybody that's 62 or older that wants to know more about it, some are going to be, I need to cut down my expenses.
Yeah.
I can't afford it. In fact, I talked with the realtors last week. Some people were looking at selling their nice, beautiful home and buying a Hayden home, downscaling, just to have, more money because they're struggling. Well, by the time they figured they sold this, took the equity and put it down at 8% or 6.5%, their payment was the same as it was at 2%.
Yeah.
That's huge in our generation because we're all in that 2 or 3%, maybe a 3.5% range.
Yeah.
And we can't move up.
Mm-hmm.
I couldn't sell my house today and move up. I couldn't even lateral move. At 6%, I couldn't afford it.
Yeah.
So, that's kind of the scenario that we're looking at, because we can take that $1,800 principal and interest and apply it towards more in our 401k while we're still working, or IRA. We could do a Roth if we wanted to. And guys, at $34 trillion in debt, where's that money going to come from? There's only one place it can come from, and that's tax dollars. So tax rates are going to go up. Kind of a pun to a guy, David Knight, The Power of Zero.
Yeah, you've told me about him.
He does some podcasts, super interesting, super interesting. And he does talk about Dave and Susie, and this, you can get 8% return, and that's not feasible. It's just, it won't last a lifetime. Mm-hmm. So I've done loans for accountants. I've done them for attorneys. One had a loan. He's just going to let that balance grow and grow and grow, and then he'll pull money out, put on his HECM, 1098, 1099, blah, 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 tax write-off. The other one's house is paid off. He's going to leave that line of credit alone, use up all of his existing accounts, and it took him from like 75, 76, he was out of money, took him to well over 100 years of age. Again, take that house out of the Holy Grail, put it into your portfolio. Everybody's different. Everybody's different. And credit score doesn't really matter. I had some people that called me. They were in foreclosure. They had the notice of default filed. The sheriff was coming. They were going to auction their home. And I said, when? They said, about a week. I said, tell them to push this off. If they'll push it off a month, and you'll have the money. We did. They had enough equity, paid that loan off, gave them some cash, and they're still head fishing probably right now. Salmon fishing. I mean, they're fishing crazy, and they never have to worry about being asked to move, ever. They'll never be booted out of the home, and they still have a little bit of access to some cash. And if they leave it alone, it'll just grow.
Wow.
So that's, again, this is why I say it's not the reverse of old. It's an investment strategy that you really need to put together with your home and your whole portfolio. I would venture to say everybody that I'm talking to, or we're talking to, or you you've put more money into your home than any asset back here. Anything. You don't, your 401ks, you haven't put that much into your IRAs, your SEPs, your Roths. You've put more into your home. And maybe just an interest. Because I'm 62, and I would just venture to say that we've probably put $300,000-$400,000 just in interest in the years we've owned homes.
Wow.
You know, because rates when I started were 7.5.
Yeah.
You know, and that was smoking good. Actually, our first rate was 10.875, and we were so happy. It had just come down from 13.
There you go.
Yeah, $66,000, but still, it was a chunk of change.
Oh yeah.
So
I know, obviously, there's a lot of stuff that goes into reverse mortgages. You love to do presentations about reverse mortgages, things like that. If someone wanted a presentation, wants to talk to you about it, what's the best way they can get a hold of you?
Probably call my cell. My cell is 208-409-1186. Maybe you can post that on your site. Yeah. I don't know. And I think the biggest thing is the second Tuesday of every month, I do what's called coffee breaks in retirement. And I just bring people in, whoever. Some people have existing HECMs, some are thinking about it, and we talk about plans, strategic plans, answer questions. The number one I did is people had questions about their statement. They're different, completely different than a forward mortgage, but it will show you the line of, or the growth in your line of credit. It will show you how much access you have money to, all these kind of things.
Those are first Tuesday of every month? Is that what you said?
Second Tuesday of every month. Title I conference room out at the Idaho Center. Title I has a conference room. What is that? 5663 East Franklin Road?
I'm not sure.
5660 East Franklin Road.
We'll find the address and we'll put it in the notes.
We'll put it in there. Yeah. But I do it down there and it's free. I have some coffee and water and a few treats, and just come in and pop it up. We can look at strategies, and I will do it individually. If people just want to look at it and say, no, okay, at least you know.
Yeah.
You know the possibilities. I mean, the sad part is, I'll use another story. Sorry, I have a lady that has a house that's paid for.
Yeah.
And she goes, the rates are just too high. The costs are too high. And just in her line of credit in 1 year would have grown over $20,000 access to cash. But she wants to wait until the $90,000 that she's got here in her IRA mandatory distribution is gone before she does this. And I go, if you do it now, that line of credit is growing at 7.75%. In 3 years, that's going to be like another $60,000, $70,000 more to you. And then you could take that 10-year payment and not worry about it, because what everybody forgets, they stop their value of their home. It's like, no, 4%. On average, 4%. And we've got that covered for a few years yet, because 2020 it was 30%, 2021 it was 35%, 2022 appreciation was 6%. So 23, they say we lost 6%, so you're still up 65% from 2019 value to today.
Yeah. That
covers quite a few years at 4%. So on average, it's a 4% appreciation.
Okay.
So.
Well, thanks for being on the show, Mark.
Oh, love it. Enjoy it.
Love hanging out with you. Even outside of the show, we've hung out a couple times and everything. Yeah. Thanks for coming.
You're welcome.
So yeah, don't hesitate to reach out to Mark if you got any questions.
Yeah.
He doesn't bite too hard.
No. I love answering the questions, and 9 times out of 10, I didn't know that.
Oh yeah. I learn something new every time I'm talking about a reverse mortgage. So
yeah, they're a great tool to have. Tool to have.
Well, thanks everybody. We'll talk to y'all later.